A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin.
Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and we're going to stick in the vein of the everything bubble. I think it's fair to say that we're seeing a lot of things overvalued at the moment, and just watching even the crypto space go out of control. I even had my maid talk about buying Bitcoin and asking me what she should do with it, and I'm like, I wonder if that's a sign. But to discuss this with me today is Jerry Robinson. Jerry Robinson is an economist, a veteran trend trader, serial entrepreneur, best-selling author, and founder of followthemoney.com. Jerry, thanks for coming on Crush with me today. I really appreciate it.
It's great to be here. Thank you.
Well, Jerry, by way of introduction, tell us about yourself and how you got into the markets and trading, and where did your passion stem from?
I learned how to trade back in the mid-1990s. I was pretty young at the time. I got my first corporate job. I was about 21, and I was working in corporate America. And a friend of mine actually began day trading. Now, this was in the mid-1990s, so this was whenever the dot-com bubble was really starting to heat up. And that was where I kind of, earned my badges or, cut my teeth, so to speak, was in the dot-com bubble. And so that was a very interesting time to learn how to trade. From that point on, I really was attracted to finance. My mother was a stockbroker. Whenever I was growing up, I helped her study for the Series 7. And so I always kind of had an affinity. I always really enjoyed that. I always really liked the stock market. And so I traded in the mid-90s, and then I traded my first option in about 2002 after the big dot-com bubble and crash and everything. And then decided to get an economics degree. And I kind of have two major passions in my life. I'm certainly a big economics fan. I've been studying economics, especially on the Austrian side, for a long time. And then also theology. I'm a student of the Bible. And so I've always found it very interesting to kind of bring those two disciplines together. There's two of my tremendous passions. And today, about 2007 or so, about 10 years ago, before we come to modern day, I was really understanding that the market was in trouble. And I had a book that I was trying to get published called Bankruptcy of Our Nation. You couldn't get anybody to publish it back in 2006, 2007, because it was all about the upcoming crash and about fiat currency, and those topics were just not highly embraced back in 2006, 2007 even. But by 2008, 2009, the book was published. It became a best-selling book, and then from there, I started a podcast and started followthemoney.com, and 10 years later, here we are. We have members all around the world who log in and have access to all of our different trading research, all of our different trading ideas. We look at stocks, options, we look at currencies, we look at global ETFs, and also cryptocurrencies. We got into the cryptocurrency space back in 2013, primarily almost all due to Trace Mayer, who I can see you've had on your podcast before. Trace Mayer was the one who actually told me about Bitcoin. Of course, it was trading for very little at the time. I think he saw it around 25 cents. By the time I actually got in, it was still below $100, but it wasn't 25 cents. And I've been kind of moving into cryptos ever since. Right now about 5% of my total investable assets are focused on digital currencies. I'll slowly ramp that up over time, but just that 5% invested since 2013 has provided more returns than everything else I do. And everything else I do is, somewhat speculative. I invest in ETFs. I've certainly played the gold mining. I play a lot of commodity ETFs. But this cryptocurrency run has just been unbelievable, even more so than the dot-com bubble that I, cut my teeth on as I first learned to trade.
Yeah. Well, I definitely want to talk about crypto in this interview. And, one of the things I was going to ask you is, where is the money right now? And, maybe we'll hold off on discussing crypto. Are there other areas right now that you see as, undervalued investments at the moment?
Well, that's interesting. I'm not really a value investor, and I don't really look for value. As a trend trader, I tend to look for situations where I can get it. Now, obviously, when you're position trading, you obviously want something that has been somewhat ignored. So if I'm looking for ignored markets, I certainly see a few. I think certainly we've seen some commodities that have been hit very hard. I'm a particularly strong fan in the renewable space. Of course, that's been bid up quite a bit in 2017. We were very long on solar stocks at the beginning of the year. That has turned out to be an incredible trade. Water stocks, we've been trading those or investing in those all year long. That has been a great trade. I think there's more room ahead for both of those. And I think lithium as well, lithium and rare earths, we've been playing those all year long. Those still look good. There's still many global markets that people can get access to through global ETFs. One particular market that we got into at the very beginning of September is Vietnam. That one's up about, 15, 16% since we got in. I think there's a lot more room for Vietnam, the Vietnamese stock market. So I like some of these things that I'm mentioning. But again, as a trend trader, I tend to focus upon things that begin to break out, and then I ride those until the trend ends. And so, I'm not so much a value investor in that respect.
As an Austrian economist, though, and someone who's a fan of it and understands that philosophy, you got to be wondering about the massive amount of money printing, the ultra low interest rates that we're seeing around the world, and just the impacts of that on the economy going forward. And do you suspect that we are getting ourselves into an everything bubble when it comes to a lot of the financialized assets in the world at the moment?
Yeah, no doubt about it. When you look at global stocks, as I just mentioned, we track 42 different global ETFs every single week for all of our members, and we provide uptrend or downtrend signals on all of them. And not just global ETFs, but that's just one of the things we track. And of those 42 markets that we've tracked all year long, interestingly enough, nearly all of them have been in uptrends. Now, there's right now, out of the 42 we track, these are major markets, about 4 or 5 of them are in long-term downtrends, and that's it. Everything else is up. And in fact, there was some data put out by Charles Schwab just a couple of days ago that shows that if we close out, if the ACWI ETF, which is the world index, if that one actually closes in the green in December, that means we will have had all 12 months as positive months. That hasn't happened ever. So global markets are, again, on a massive uptrend. But what is that? That, of course, has to do with the Federal Reserve's easy money policies. They started this garbage. They started it by distorting prices, by distorting incentives. They discouraged saving. They encouraged borrowing. They encouraged, malinvestment in the end. Nearly every speculative asset class around the world is rising right now. So we would call it, like you say, an everything bubble. Global stocks, as I mentioned, are at or near all-time highs. The total global market cap of all equities sits around $80 trillion. Of course, you have to back out Venezuela. If you include Venezuela, that number goes over 100 trillion, but their economy is too hyperinflationary to be considered. But global stocks are hot. Cryptocurrency prices are exploding to new all-time highs. Retail investors are becoming insatiable, but it's still a very early inning, we believe, for cryptocurrencies because, again, even though the media seems to be making some noise, the overall ownership of them is very, very small on a market cap basis versus everything else, especially considering the massive change that they could really bring. Also, real estate prices are heating up. 30-year mortgage rates are hovering around 4.2%. Banks are slowly dumbing down their lending criteria. Americans are now buying new homes at the fastest pace since 2007. And then, of course, if you look at this current environment where we have all of these asset classes rising, of course, we have to blame the massive money printing scheme that the Federal Reserve started. Their easy money policies that still persist nearly 10 years after the last market crash. The personal savings rate right now has fallen to the lowest level since 2007 and 2008. So that shows that there is a lot of speculation and people are starting to feel more comfortable. During the 8 years that Barack Obama was in office, as the stock market soared 175%, or even 200% in some cases, all depends which index you measure, you'll find that there was a tremendous amount of angst because we were still in the fog of that 2008 crash. And so people didn't believe it. They said, no, the market, it can't be going up. And their politics got in the way of simple market behavior. They couldn't bring themselves to believe that the market was really rising underneath Barack Obama. But change the stooge in office and you put Donald Trump in, and then suddenly the fears go away. Very interesting and very telling about the United States of America. But over the last couple of months, especially since the summertime, we've seen personal savings rate just falling as people are no longer feeling like they have to protect against a crashing market because Donald Trump's going to fix it. Yeah, that's it. He'll be the one that fix it. And then, of course, on top of that, you see credit card debt levels near their 2008 peak. So there's an old quote that as a trader, I've been trading now for 20 years, and there's an old quote that I often think of, and that's by Jesse Livermore. I always tell my students that there is nothing new under the sun. And Jesse Livermore put it this way. He said, there is nothing new on Wall Street or in stock speculation. What has happened in the past will happen again and again and again. Why? This is because human nature does not change, and it is human emotion solidly built into human nature that always gets in the way of human intelligence. Of this I am sure, unquote. And that's Jesse Livermore. And that's the fact. We are in another big bubble that's been inspired by the Federal Reserve. People are piling into real estate because rates are low and because the lending standards are being dumbed down. People are getting into stocks because they see that they are rising and they don't want to be left behind. And of course, with cryptocurrencies, people are piling in, not even really knowing what they are, but realizing that that FOMO, that fear of missing out, is just so strong. And this is, of course, brought to us courtesy of the Federal Reserve. You can't blame anybody else but the Federal Reserve for distorting incentives, distorting prices, distorting the economy until we go through the next bust again. Now, I will say this, that in the next bust, I do expect cryptocurrencies, and especially those that are, that are considered the top of the line, like Bitcoin, Litecoin, Ethereum. I would expect these to probably do better than some people expect in a market crash because they're perceived, and again, as an Austrian economist, it's important to understand perception. They're perceived to have, to be outside of the banking system, and in reality they are. And so in many ways, we're going to see, I think, on the next bust, a very unusual kind of wealth transfer. In the end, I'll say this, that I am also a gold bug. I haven't found too many cryptocurrency investors who understand gold, and I haven't found too many gold investors who understand cryptos. I'm both. I believe in both, and I think both belong in a speculator's portfolio.
Well, I can speak for myself. I've gone from being a gold investor to also a cryptocurrency investor, and following and researching and looking for sound money options, I've come across cryptocurrency, maybe similar to your own story as well, Jerry. But I agree with everything you said, and you articulated it very well. So I want to ask you then, with cryptocurrencies, we've been conditioned, at least with precious metals, to at least have this period where we go through this very long bear market. Since 2011, gold has essentially been down with the uptrend as of lately, but still very far from its all-time high. Could we be setting ourselves up for an extended bear market in cryptocurrencies? And how fast could the sentiment change, given your experience of going through market cycles? Nothing new under the sun.
Well, there's no doubt about it that we are possibly, and I use the word possibly here because we don't have a frame of reference. I know some are quick to call the cryptocurrency situation a bubble.
Every step of the way up, right?
Every step of the way up. And I think it's important, if you're going to be a successful investor, that you can distinguish or differentiate between a bubble and an uptrend. And I think sometimes they really are kind of the same thing. I mean, as a trend trader, I ride uptrends, I sell or get out of downtrends or short downtrends. And so with cryptos right now, we're living through a monetary revolution. I mean, decentralized economies are exploding all around us. And what's happened with gold and Bitcoin in particular, this distinguishing, the distinguishing factors between the two, man has always desired to hold money in his hand. When he thinks of money, he thinks of something that he can hold. For about the last 300 years, 350 years, we've done paper money. Before that, it was something else, gold, silver. But now, as we kind of have evolved over the last several decades, we've gone from holding that paper money then to putting it in the bank and then writing checks. And now we have paper checks. And then we move into debit cards, and now we have debit. So many of us really don't hold cash. And on top of that, we now live in this digitized world where many of our assets are virtual. So think about this. If you make a YouTube video and you upload that to YouTube, that's one of your assets. That's your property. Now, does it exist? Can you hold it in your hand? Well, not really. I mean, but it exists and it's real. To you, it is anyway. Now, how about when you upload a file to Dropbox, or maybe you have files that you have in the cloud that are important to you? Are those real? Well, I don't know. I mean, they exist somewhere, don't they? And I think that's what's happened here with money, is that because people are becoming more comfortable with virtual assets, they understand that things do exist in the cloud and that they are real. For example, an email. You have a whole bunch of emails. You would consider them personal property. You would say that they're real. But if the grid went down, how would you figure, without a GUI interface, without a graphical user interface, how would you be able to know what those emails said? So I think in this current environment where we are, virtual assets make sense, and you really can't argue against them. Because everybody understands that things can be of value and stored in the cloud. What Bitcoin and what cryptocurrencies really bring to the table is they bring instant transferability. If I hold gold in my hand, that's good. I can hold it in my hand, and I want to hold gold in my hand. But what I can't do with that gold is instantly transfer it to you in another country. I can't do it without spending a lot of money. I can't do it without some sort of risk. If I have cash and I want to get it to you, it's the same way. So this is ripe for disruption. I believe you will see, of course, cryptocurrencies backed by gold. That would obviously be even a better solution, that because if something does disappear, at least you have something backing it. But again, I think that right now we could see Bitcoin crash. I would view that as a buying opportunity personally, and I would add to my current position. Now, remember, I just have 5% of my total investable assets in cryptocurrencies, and that has provided me unbelievable gains since 2013. I can't even believe the kinds of returns that these things have thrown off. And so, but again, I'm keeping my exposure at 5%. I may raise that later, but probably after the next crash. So I expect them to have a crash for sure. And how would that unfold? Probably some negative story. Think about all of the institutional money that wants to get into the crypto space. How much institutional money is in the crypto space right now? Very little, almost zero. How do those guys get into silver when they want to get into silver? They trash the silver markets through the futures market, and then they go in and they buy it, right? Well, they can do the same thing with Bitcoin now. They can do the same thing. They could run stories about how some exchange, is ripe for being hacked, or they could scare people, or they could put out all kinds of stories on the evening news to disrupt the rise, take advantage of the collapse, get themselves positioned for the next run. I think anybody who is staying away from digital currencies in this environment may think they're being wise, but in reality, it's like staying away from email in 1997. You're going to embrace it eventually. So you might as well start getting comfortable with it now. Maybe limit your exposure on how much you're going to be exposed to it. And maybe use a lot of, of course, do a lot of research before you choose which currencies you're going to be with. Right now, we have two portfolios that are both just going crazy in 2017, and we expect 2018 to do well too. There's a core crypto portfolio that we have, and then also a penny crypto. We have 6 cryptos right now that are less than $2 that we expect to reach very, very high prices in 2018. So we provide a lot of guidance on that, but I think people need to use wisdom here and to realize that they really are in a world where virtual assets exist, and it's important to not ignore that.
Jerry, well put. And so getting back to the U.S. economy, this is something that is obviously much bigger than cryptocurrency and slower moving than that space. But people are largely bullish, with the bullish sentiment on the economy. We talked about Trump and people getting passionate about the economy because of that. Fake or not, you do have a lot of people with money that were kind of on the sidelines, hesitant about the Obama economy, but now saying, oh, hey, well, I got a little more confidence now in the economy because of Trump. Again, fake or not, you do have a lot more people bullish right now, and sentiment is very positive. And I'm just wondering, again, going with your experience, how quickly can this turn, this sentiment and this fear, and go into a bearish type environment that sets in globally, really?
Well, I think we can take a look at a few different instances. I mean, tracking global markets, there's certainly some things that we can see. For example, earlier this year, Brazil suffered some major political setbacks, big old, all kinds of scandals in Brazil. The same thing with Israel. Both markets got hammered. I mean, there were some major downturns in both economies. Now, they don't impact the whole global economy, so they didn't have the same power that a U.S. downturn would have. I think that if there is some sort of smoking gun on Donald Trump when it comes to all of these investigations that are going on, that would cause a near-term blip, because it would cause people who are optimistic about the Trump agenda, deregulation, etc., to lose some hope that was going to continue. So I think any kind of political, confirmed political scandal around Trump, if impeachment comes up, I think those kinds of things are sudden movements. We saw just recently, ABC kind of botched a news report. Brian Ross did a report on Donald Trump, and it shook the markets. Indicating that something was wrong, with him and Michael Flynn, I think. I can't remember all the details. My point is that those kinds of things could have a near-term blip. As far as a longer-term, more sustained bear market, I think that's a great question. I mean, we've been riding so high since 2009, it's hard to figure out what that black swan event is. I mean, do people suddenly realize that things are overvalued and start selling? I guess that could happen, but that's not really how I view it. I think it will be some sort of black swan event that stirs us from our current euphoria.
It's kind of interesting. It's almost like there's this net positive impact the market goes through, and I suppose that's because of inflation. But over time, if you look at a chart, it's just had corrections and then gone back higher. And I'm wondering if that's just the nature of people and the options that they have, because sure, we can anticipate a bear market, but are we just going to continue to see what we've seen the last 40, 50 years with just this ever increasing stock market that outpaces inflation and all the things that the market has done for the baby boomers' savings, 401ks, and what people rely on?
Yeah, that makes sense. I mean, as we look forward, it's difficult to know. And I tell you what, the way that I've made the most money over the last 20 years is by not trying to outsmart the market. When it's moving in a particular direction, it must have something of equal and opposite force to drive it in the opposite direction. And so uptrends, when they're intact, you just don't mess with them. You follow the money, you follow the trend, you let the trend be your friend, is what I've learned over 20 years. And whenever inevitably that runs out of steam and we don't know where that ceiling is, we're still probing for it. We continue to see new highs on the stock market consistently. We continue to see new highs on cryptocurrencies. Price discovery is in full effect thanks to the wealth effect. Many people feel wealthier because they open up and they see their cryptocurrencies, or they see their stocks, or they see their 401k, or they see their IRA. And so therefore they start cutting back their savings. They start going on more vacations. This is just the same old ball of wax, like you said, over and over and over again. History's always the same. It's not new. Nothing new under the sun. And so we're in the greedy phase. Guys who are value investors like Warren Buffett would say, don't be greedy here, take your gains. I agree with him, but what I wait for personally as a trend trader is I wait for a signal. So I don't trust my gut. My gut is not smarter than the market. The market doesn't care what I think. It doesn't care what I know. It doesn't care what I think should be. It doesn't care what I think about history. It only cares about what it's doing, and it's moving higher right now. So I don't argue with it. But when I start to see volume, big volume outflows, I follow the institutions. And so when the big money starts to leave this rally, then I'll probably join them. In fact, I definitely will join them. But for now, I'm staying on the side of the big money and the smart money as they continue to push this rally higher. Everybody's looking for yield right now. There is no yield anywhere, thanks to the Federal Reserve. So until something fundamentally changes, until the big money starts pulling out of some of these markets, then I have no reason to either.
Well put. Jerry Robinson, everyone, of followthemoney.com. Jerry, if people want to learn more about you and what you do and the content that you put out, please let them know a little bit more about your website and where they can find you.
Oh, sure. Well, we have, again, our website, followthemoney.com. We have a free podcast that we do every week. We have a free newsletter that we put out every weekend. It's a light version of what our members get. So if you want to just come out and check out what we have, you can sign up as a free bronze member. You go to followthemoney.com and just click on the plans and pricing, choose the free plan, or you may want to try one of our paid plans. We provide lots of great insights for buy signals and sell signals on stocks, ETFs, options, and cryptocurrencies. So if you're looking for that kind of stuff, we provide trading coaching to help people get aboard. We've helped so many people over the years break free. So many people want to do something different. Oftentimes they get stuck in the consumption trap. They're working a job that they despise, but they have to because they got a mortgage and they got kids and they got credit card bills and everything. And so what we try to help people understand is that you can be empowered. You don't have to be a victim of the consumption trap. We teach that to our members. And so if that sounds interesting, if that's something that's interesting to you, come check us out, followthemoney.com. And again, I really do appreciate this opportunity to be on your program today.
Well, thanks, Jerry. The pleasure was all mine. You're welcome back anytime here at Crush. Thanks for your time.
Yeah, thank you.